Hey everyone, and welcome. I am so thrilled you're hanging out with us today because, wow, we are taking on a literal giant of a topic. We are cracking the code on the U.S. credit score system. If you've ever felt like your financial life is being graded by this secret, invisible scorecard, trust me, you are not alone. Today, we're pulling back the curtain on the whole shebang. We're going to demystify exactly how the U.S. financial system measures your financial reputation, using only the cold, hard facts. So get ready, because by the time we wrap up this explainer, you are going to know exactly how to navigate this system with absolute confidence.
Because seriously, did you know your credit score can affect loans, apartments, insurance, and even some jobs? Yeah, this isn't just about whether some bank hands you a shiny new credit card. In the United States, this system acts as the ultimate gatekeeper to your daily life. Want to sign a lease for a nice apartment in a new city? Well, the landlord is checking your score. Trying to get a good rate on car insurance? They are absolutely looking at this number. Even some employers will run a credit check before offering you a job, especially if you're in finance or security. The stakes here are incredibly high, which is exactly why understanding the system is just entirely non-negotiable.
So, here is our step-by-step roadmap for today. First, we'll decode the magic 3-digit number. Second, we'll break down the core scoring factors. Third, we're looking at age, mix, and inquiries. And finally, improve score, unlock opportunities. Let's jump right in.
All right, kicking things off with Section 1, the magic 3-digit number.
300 to 850. Just imagine this range as a massive visual gauge. It is the absolute scale your entire financial reputation is measured on, here in the US. Literally every single adult interacting with the credit system lands somewhere on this exact spectrum. It is the universal language of American finance. Honestly, whether you're buying a coffee on credit or a whole house, this scale is watching. But what does a number between 300 and 850 actually mean?
Let's look at the core definition here. A credit score is just a number from 300 to 850 that reflects how responsibly you use credit. That's it. People often talk about it like it's this incredibly mysterious black box, but at its heart, it's really just a mathematical reflection of your past behavior. It tells lenders, in one quick glance, the likelihood that you're going to pay back the money you borrow. If you use credit responsibly, your number goes up. If you're a bit reckless, it goes down. It's essentially a quick snapshot of your financial reliability. So how do these numbers actually translate into ratings? Check this out. If you're sitting between 300 and 579, that's considered a poor rating. In real life, that means you'll likely face pretty high interest rates, or just flat-out denials for loans. Moving up to the 580 to 669 range, you're in the fair zone. You've got some options, but they certainly aren't the cheapest ones. Now 670 to 739 hits the good category, and this is where doors really start opening for standard loans and apartment approvals. Then we hit 740 to 799, which is very good, giving you access to some highly competitive rates. And finally, the holy grail, 800 to 850 is excellent. If you are in this top tier, you are essentially getting the red carpet treatment from lenders. The difference between a poor and an excellent score can literally mean saving tens of thousands of dollars in interest over your lifetime. No joke. Moving right along, Section 2, the core scoring factors. So how do you actually get to that excellent tier? Let's focus on the absolute heaviest hitters that you can control. First up, always pay your bills on time. Guys, this is absolutely crucial. Payment history is the literal foundation of your credit health. Think of it as a strict, unbreakable rule. Missing even a single payment on a credit card or a loan sends a massive red flag to the system. It basically signals that you're struggling to manage the credit you already have. Even if you do literally everything else right, failing to pay on time will severely damage your score. In the US financial system, punctuality isn't just being polite, it is mathematically required. Next up is another huge piece of the puzzle: credit utilization. This is all about your available limit versus your actual usage. The golden rule here is that you absolutely must keep your card usage below 30% of your total limit. But if you want to be a superstar and truly master the system, hitting that tiny 10% slice of ideal usage is the ultimate goal. For example, if you have a credit card with a $10,000 limit, maxing it out makes you look incredibly risky. Keeping a balance under $3,000 keeps you in the safe zone, but keeping your usage under $1,000, that magic 10% mark, is the gold standard that practically shoves your score toward that excellent tier. Okay, let's look at Section 3, age, mix, and inquiries.
So, once you've got payments and utilization locked down, you are ready for the secondary nuances. This is what gives you that expert-level understanding of the algorithm. First up is credit age. Basically, older accounts generally help you. In the credit game, time is 100% your friend.
Lenders love seeing a long, stable history of responsible credit management. It proves you aren't just a flash in the pan. This means keeping your older credit accounts open is usually a really smart move. Even if you almost never use that very first credit card you opened back in the day, the age of that account acts like an anchor. It establishes a long track record that actively supports a higher score.
Next is credit mix. Having a solid mix of credit types, like, say, pairing a revolving credit card with an installment loan like a car payment, may actually improve your score. It shows lenders you can juggle different types of financial responsibilities at the same time without dropping the ball. But on the flip side, you really have to avoid putting in too many applications in a short amount of time. Every single time you apply for new credit, a hard inquiry gets pulled. If you apply for 5 different store credit cards at the mall in a single weekend just to get a quick discount, the system panics. It looks like you're desperately seeking cash, and your score will take an immediate hit. So good mix is great. Manic applying is dangerous.
Bringing it home with Section 4. Improve score, unlock opportunities.
Now that you know exactly how the scoring engine works under the hood, it's time to take action. If your score is lagging a bit, here is your ultimate rapid-fire game plan. Step 1. Pay on time. Set up autopay if you have to, just never miss a due date. Step 2. Reduce your balances. Attack that credit utilization by paying down what you owe to get well below that 30% threshold. Step 3. Avoid unnecessary debt. Don't take out loans or open new credit cards unless you absolutely need them. You got to protect yourself from those hard inquiries. And Step 4. Review your reports. Actually look at your credit reports to check for errors. Sometimes a dumb mistake on your file is what's dragging your score down, and you absolutely have the right to dispute it. Stick to these 4 steps, and your score is definitely going to climb.
Because at the end of the day, here's the so what of it all. Good credit can help you qualify for way better rates and opportunities. Your score isn't just some vanity metric you brag about. It's practically the physical key to unlocking the best financial life in the USA. A great score means lower interest rates on a mortgage, way easier approvals for the apartments you actually want to live in, cheaper insurance premiums, and a totally clear path when an employer runs a background check. By managing this 3-digit number responsibly, you are literally buying yourself financial freedom and peace of mind. So, I'm going to leave you with this final thought. Are you ready to stop letting the system manage you and start managing the system? The rules of the U.S. credit system are right here in front of you, entirely within your control. If you're ready to keep mastering this stuff and take your financial knowledge to the absolute next level, make sure you hit subscribe to Vision Ledger today. We're going to keep bringing you these clear, focused explainers so you can thrive. Thank you so much for joining me on this deep dive, and I will see you in the next one.